Guys, this is Due Diligence here, and today we're going to talk about where the directional. Well, most of the times, I don't really talk about the directional play of the market anymore because a lot of times it doesn't really matter. Because due to the two-sided volatility, most people just trade butterflies right now on the options. But I know a lot of you don't trade options, so I'm going to talk about some of the possibility of where the direction is going to go. So today, the market is very interesting, right? The market decided to rebound at about 2.5%, and then by the end of the market, it dropped to the rebound of 1%. So the reason is the following, okay? The reason why I have a jump in the morning is because all of a sudden, Congress decided, hey, we're going to extend the debt ceiling to December. And okay, like OPEC's not going to increase the oil price, right? The oil price stay the same. Technically, it's the oil supply. So what OPEC's doing is like, okay, I'm going to stick to my oil supply. I'm not going to increase the supply. I know the demand is going to stay semi-flexible or semi-fixed in the next few months, which is correct, actually, because there's going to be a demand bottleneck by the end of October. What you really need to look at is actually the natural gas price instead of the actual oil price. What's going to happen is this price is going to increase, and then it's going to sort of like, because this is a complementary, and it's going to induce this to go further up. This is why JP Morgan's $90 price target is quite interesting. It did hit my target of $80. Around June, I said it's going to be, 73 in no time. And then by August, I said it's going to be $80 at no time. And it might go to 120, but we're not sure. But when it goes to 120, it's going to be the peak of inflation. But anyways, let's go back to SPY, right? We talk about the SPY. We call this a flash. So yesterday, this is the flash sell. A flash sell over here. And today is a flash buy day. In general, we just need to know that the IV is going to fluctuate positive to negative, negative to positive indefinitely until the Congress reached an agreement, or at one point that people is going to realize, hey, like inflation is going to go somewhere that's better than 5.5%. But in reality, the actual inflation trajectory is going up to 7%. And if you do the math, you will realize, okay, so SPY have a soft increase all the way up to 450 by the time where inflation reaches 7%. But in between those lines, it's going to be very, very volatile. Okay. And you guys are here because you're like, oh, I just want to know the conclusion of this. I don't really want to know like all of the reasoning. Like I don't care about what the Congress do. I don't care about an oil price increase or not. I just want to know if SPY is going to go up or down. So tomorrow there are two situations. One is because you have this huge liquidity gap over here. That means the market is very confident that, everything is going to be over 435, which is over our, liquidity line that we set up 2 days ago, which just further tells you guys that our technical analysis is super on point. So tomorrow there are two situations. One is, okay, we overreacted. We're going to fill this gap, and there's going to be a solid line extending to about 434-ish. That's one situation. Let's give it a probability of a 50% chance. I do think today we have too much of a rebound, too much of a flash buy. I think everything increased way too fast in a way too short a period of time, which I think is very unhealthy in general. And another situation is, let's just put it 50%, it's going to gap up again. But it's going to have another flash buy situation. It's going to gap over here, and eventually it's going to close at 442. So either way, what I did today is I actually bought some short on Alibaba and bought some short on the stocks that increased over 5% on the day. Because if it over 5% means it's 2x leverage as SPY. And in reality, if that ceiling was extended to December 9th, that means on October 9th, they actually have a reason to hike the interest rate. So if that happens, that means the soft target line for SPY is over. By the end of December, the highest the SPY can go is about $4 to $6 higher than previous high, which is 460. But the lowest SPY can go is actually 420. So we have a very uneven spread here. It really and again, tomorrow is a Friday, and on Fridays usually oil will increase in price. So let's just see how it happens. I give you guys a probability distribution. You guys, do what you want with that information that I just gave you, and it's quite risky right now. So again, when in doubt, go back 2 or 3 videos when I talk about SPY and uncertainty. How do you deal with uncertainty? You contract your position. And then you contract your option position and hold the stock that you think long-term wise speaking. What I mean by long-term in this case, at least in 2 months, any stock you think in 2 months can be higher than the current price, you should hold it. And of course, you can use like 2% or 5% of a portfolio to make some very interesting flash option trades, but those are very risky. Anyways, this is for this video. If you like this kind of content, smash a like button. If you want more and more people to see our content, sub to our channel. And we're gonna probably post another video about some specific stocks that we think is pretty good for the next week. And yeah, this is it for this video. Hope you guys love it. See you guys on the upside.